Michael Burry just revealed he's buying into a stock that's going to surprise a lot of people. It's not an AI company. It's not a hot growth stock. In fact, it's a company that's down roughly 75% from its highs. Sales growth has stalled, profits are under pressure, tariffs are crushing margins, and almost every analyst on Wall Street has turned bearish. Out of 32 analysts covering this stock, only 2 have a buy rating. The company is Lululemon. So why is one of the most famous contrarian investors alive, the guy who called the 2008 housing crash, putting money into a brand that everyone else has written off? Let's break it down. Before we get to Burry's thesis, let's understand why the market has turned so negative on Lululemon. There are 5 main issues slowing growth. Comparable sales in North America have gone negative, customer traffic is down, and management is guiding for near zero revenue growth this year. Tariffs. Lululemon manufactures much of its clothing overseas, and US tariffs alone cut gross margins by nearly 3 percentage points last quarter. Self-inflicted mistakes. Some product launches have flopped, and inventory planning issues have left stores short on popular items while overstocked on others. Rising competition. Brands like Aloe and Vuori have gained ground, and cheaper alternatives are now widely available through retailers like Amazon. Leadership uncertainty. The company is currently run by interim co-CEOs. A permanent CEO, Heidi O'Neill, formerly of Nike, isn't taking over until later this year. Put all 5 together, and it's easy to see why the stock has been crushed. For most investors, that's where the story ends. They write Lululemon off and move on to something more exciting. But Michael Burry has built his career on being a contrarian. When Burry dug into Lululemon's history, he noticed something interesting. The company went through an eerily similar crisis in the early 2010s. There was a major PR disaster, a recall over see-through yoga pants, controversial comments from the founder, collapsing margins, and constant management turnover. At the time, it looked like Lululemon's best days were behind it. Instead, a new CEO came in, execution improved, margins recovered to record highs, and the stock went on one of the best runs in retail over the following decade. Burry isn't guaranteeing history repeats, but his core question is this: is the Lululemon brand actually dying, or is it just being mismanaged? Before we move on, there's one problem with watching videos like this. You learn one interesting fact, but you never get the complete framework. That's exactly why I created the complete SpaceX Investor Handbook. This isn't another ebook filled with opinions or hype. It's a structured research handbook that breaks down how SpaceX actually works as a business. From Starlink economics and launch revenue to government contracts, competitive advantages, valuation frameworks, risks, and the questions serious investors ask before making a decision. Instead of spending weeks jumping between articles, analyst reports, and random YouTube videos, you'll have everything organized in one place. If you're serious about understanding SpaceX, not just following the headlines, this handbook will save you hours of research and give you a much clearer picture of the company. You can find it through the first link in the description. Because the cost of a research handbook is tiny compared to the cost of making an investment decision based on incomplete information. Let's move on. Video topic. Pillar 1. The brand is still strong. Burry points out that over 95% of Lululemon's customers aren't shopping at Aloe or Vuori. The men's business has also quietly grown into a multi-billion-dollar segment on its own. In his view, this isn't a brand becoming irrelevant, it's a brand being fumbled. Pillar 2. The profit pressure looks temporary, not permanent. Tariffs, short-term inventory missteps, and a few underperforming launches are real problems. But they're a very different story from a business whose core economics have permanently broken down. Pillar 3. The balance sheet is still solid. Lululemon has roughly $1.5 billion in cash and almost no debt, and it's continuing to buy back its own shares. Burry has also highlighted that the company's tangible book value per share has roughly doubled over the past 3 years, from around $20 to $40, something he calls rare in today's market. Those aren't the financials of a company fighting for survival. Burry has even compared the current sentiment around Lululemon to GameStop back in 2019. a stock everyone had given up on, right before it became the center of the meme stock frenzy. It's worth noting Burry doesn't typically talk in terms of price targets. He thinks in terms of expected long-term returns. Based on his own assumptions, he believes Lululemon could deliver a strong annualized return over the next several years if execution improves. But that's not a prediction, and it's definitely not a guarantee. It's simply the output of his personal valuation model, built on his own assumptions about the business. Reports indicate Burry has been adding to his position in the $110, $125 range as the stock hit new lows this year. This thesis isn't risk-free. It could fall apart if new CEO Heidi O'Neill fails to turn execution around. Competitors continue taking meaningful market share. Today's slowing growth turns out to be structural, not temporary. Burry isn't betting on a perfect business. He's betting on a mismanaged business that he believes the market has become too pessimistic about. This video is not a recommendation to buy, hold, or sell Lululemon or any other stock. Michael Burry already holds a position in this company, so his view may be biased toward his own investment. Investing involves risk, and past performance is never a guarantee of future results. Do your own research, DWAR, read the company's latest earnings reports, look at multiple analyst perspectives, and consider speaking with a licensed financial advisor about your personal situation before making any investment decisions. That's Michael Burry's Lululemon thesis, a contrarian bet that the market is treating temporary problems like they're permanent. Whether he's right is something only time will tell. If you enjoyed this video, drop a like, and I'll see you in the next one. And one last reminder, if you're planning to invest in SpaceX, that's exactly why I created the complete SpaceX Investor Handbook. It includes the key insights and frameworks you need to decide whether SpaceX is actually worth investing in or not. The link is in the description. Grab your copy today, because spending a few hours reading this handbook is far better than wasting days researching scattered information or making an investment decision with an incomplete picture.